Following the launch of popular cryptocurrencies like Bitcoin and Ethereum, which remain the only large-scale uses of blockchain technology, this technology gained notoriety. The development of other cryptocurrencies, altcoins, including Litecoin, Primecoin, Namecoin, and Zcash came about as a result of Bitcoin and Ethereum gaining the attention of the financial services sector. Also, they are largely responsible for the development of the initial coin offering (ICO) mechanism, a brand new notion for financing innovative ideas and goods. There has been a rise in interest in blockchain-based applications outside of cryptocurrencies over the past few years, particularly those that aim to take advantage of distributed ledger technology's decentralized nature as well as their security, transparency, and anti-tampering features. Many applications in the context of permissioned blockchain infrastructures, which provide fine-grained authentication and authorization while also eliminating the need for difficult and time-consuming proof-of-work (POW) processes, take advantage of these qualities. The latter is essential for supporting applications that require transaction completion times that are faster than those offered by more established public blockchains like Bitcoin and Ethereum. As a result, platforms like R3/Corda and Hyperledger Fabric, both of which allow hundreds of transactions per second, have emerged to support permissioned blockchains. Blockchain technology has the potential to fundamentally alter how your sensitive and important data is perceived. Blockchain reduces fraud and unlawful behavior by creating a record that cannot be changed and is encrypted end-to-end. By employing permissions to restrict access and anonymizing personal data, privacy issues can also be solved on the blockchain. In order to prevent hackers from accessing data, information is kept across a network of computers rather than on a single server. Without blockchain, every company needs to maintain a different database. Blockchain uses a distributed ledger, which ensures that transactions and data are recorded consistently across all locations. Full transparency is provided since every network user with permissions can see the same data at once. Time and date stamps are used to immutably record each transaction. Members may access the whole transaction history thanks to this, which almost eliminates the possibility of fraud. Blockchain establishes an audit trail that records an asset's origins at each stage of its travel. This helps to give the proof in industries where customers are concerned about environmental or human rights issues surrounding a product, or in industries plagued by fraud and counterfeiting. Blockchain makes it feasible to directly communicate provenance information to customers. Data on traceability can reveal weak points in any supply chain, such as those where goods may be stored on a loading dock while being transported. Conventional paper-intensive procedures take a long time, are subject to human mistake, and frequently call for third-party mediation. Transactions can be finished more quickly and effectively by automating these operations with blockchain. The blockchain may hold documentation and transaction information together, doing away with the necessity for paper exchange. Clearing and settlement can happen considerably more quickly because there is no need to reconcile various ledgers. With smart contracts, transactions can even be automated, enhancing your productivity and accelerating the procedure even further. The subsequent stage in a transaction or process is automatically initiated after pre-specified requirements are satisfied. Smart contracts lessen the need for human intervention and rely less on outside parties to confirm that a contract's provisions have been adhered to. When a consumer files a claim for insurance, for instance, the claim may be immediately settled and paid once the customer has submitted all required evidence. The blockchain technology has cost-effectiveness and traceability advantages for supply chain management. Simply put, tracking the movement of commodities, their origin, amount, and other details may be done via a blockchain. This improves B2B ecosystems' transparency by streamlining procedures including ownership transfers, production process assurance, and payments. A blockchain system may take you all the way to the point of origin if an error is found in the supply chain. Businesses now find it simpler to conduct investigations and take out appropriate steps. This has applications in the food industry, where it's critical to manage batch data, origin information, and other vital information for quality control and safety. Blockchain transaction recording virtually eliminates human mistake and shields the data from any manipulation. Remember that records are checked as they are sent from one blockchain node to another. Your records will be assured to be accurate, and a method like this will also provide a very traceable audit trail. Of course, the basic efficiency of the entire accounting process also improves. Business entities are only permitted to retain a single, joint register, as opposed to keeping separate records. Furthermore, the accuracy of a company's financial data is ensured. Time-consuming contractual transactions can impede a company's expansion, especially for those that routinely receive a deluge of information. Through the use of smart contracts, contracts may be automatically verified, signed, and enforced. By doing away with the need for mediators, the business can save both time and money. Today's blockchain systems, like credits, provide self-executing smart contracts with a built-in coin. Businesses can combine services without divulging a lot of confidential information to third parties by condensing everything into a single platform. The promise of blockchains in the area of voting all comes down to trust, much like in supply chain management. Opportunities related to upcoming elections for office are currently being sought after. One illustration is the Moscow government's intention to evaluate the efficacy of blockchains in local elections. The possibility of election fraud, which persists despite the widespread use of computerized voting systems, will be greatly reduced as a result. Another instance is how Nasdaq used blockchain technology to simplify shareholder voting. It was successful thanks to their partnership with a blockchain technology provider and regional digital identification services, which gave governments access to identity cards. They characterized the e-voting experiment as useful, important, and disruptive after seeing success. It has long been proposed to use blockchain technology in the trade of commodities and securities. It is hardly unexpected that stock exchanges now view blockchain technology as the next major advancement given their open yet reliable character. In reality, the Australian Stock Exchange has already made the decision to run its business on a blockchain-powered system created by blockchain company Digital Asset Holdings. After much hoopla surrounding distributed ledger technology, today's news, according to Blythe Masters, CEO of Digital Asset, delivers the first real demonstration that the technology can live up to its potential. There are two different kinds of businesses: those who ignore their monthly electricity bills and those who ponder where their energy costs are coming from. Commercial buildings and homes can now benefit from blockchain-enabled transactive grids for sustainable energy solutions that precisely track usage in some regions of the world. Power peers in the Netherlands and Exergy in Brooklyn are two examples. Blockchain can potentially be used to track clean energy more accurately. After all, nobody can actually tell if the electricity that is supplied to the system was produced using fossil fuels, solar energy, or wind energy. Historically, the government has issued tradable certificates that can be used to measure the use of renewable energy. To put it simply, these certifications are poor at serving their intended purpose, something that blockchain would easily handle. And last, there are valid reasons for the stratospheric ascent of Bitcoin and all other cryptocurrencies on the market. One benefit was that it made it possible to transfer money quickly, securely, and affordably. Although there are already many platforms that handle international payments, such as PayPal, they frequently charge hefty fees every transaction. There are particular constraints on other P2P payment platforms as well, such as geographic restrictions and minimal transfer amounts. Because of this, more companies and common people are starting to favor cryptocurrencies for cross-border payments. Users are given more discretion when it comes to the movement of their assets, and they are generally more secure. It is obvious that the blockchain is expanding beyond cryptocurrencies into other businesses. Although it may be argued that most people aren't yet ready for decentralized digital ledgers, given how far blockchain technology has come, it won't be long before non-adopters catch up. Thank you for watching. Subscribe to watch more.